Most people think trading and gambling are basically the same thing. Risk money, hope you win, feel emotional, repeat. And to be fair, from the outside, they can look identical. Someone staring at charts all day, clicking buy and sell buttons, watching money go up and down. It looks random. But here's the truth most people completely miss. Trading only becomes gambling when there's no control. That's the real difference, because professional traders are not trying to predict every move. They are managing risk, managing behavior, managing probability. Gamblers do the opposite. They chase outcomes, they chase excitement, they chase the feeling of winning. And that single difference changes everything. In this video, we're going to break down the real difference between gambling and trading. Not the surface level answers, not trading uses charts, not gambling is luck. We're going deeper than that. Because the scary part is this: a lot of people who think they're trading are actually gambling with extra steps. And until you understand the difference, you'll stay trapped in the same emotional cycle that destroys most traders. Let's start with the biggest illusion. Most gamblers believe they're in control. That's what makes gambling dangerous. The slot machine player thinks one more spin. The sports bettor thinks this parlay feels right. And the emotional trader thinks this setup looks strong. Different environment, same psychology, because gambling is not defined by the activity. It's defined by the mindset behind it. That's the part nobody talks about. You can technically trade the markets and still behave exactly like a gambler. Think about how most people trade. No real risk management, no patience, no plan, just reacting. Price moves up, they feel excited. Price moves down, they panic. One win, they increase size immediately. One loss, they revenge trade. That's not trading, that's emotional betting. And the reason it feels so addictive is because both gambling and bad trading trigger the same psychological loop. Uncertainty, excitement, reward, loss, recovery, repeat. Your brain becomes obsessed with outcomes, not process. And once that happens, you stop thinking long term. You start chasing emotional relief. That's why gamblers double down after losses. And it's why emotional traders suddenly risk more after getting stopped out. They're not trying to execute properly anymore. They're trying to feel better. That's the shift. Now here's where real trading becomes completely different. Professional traders are not emotionally attached to individual outcomes. That sounds simple, but it changes everything. Because gamblers think in terms of, this trade needs to win. Traders think in terms of, this setup needs to be executed correctly. Huge difference. A gambler needs certainty. A trader accepts probability. And if you don't understand probability, you will always drift toward gambling behavior, because probability means something uncomfortable. Any single trade can lose, even a perfect setup, even a clean entry, even flawless analysis. That reality destroys emotional traders because they secretly expect certainty. They think, if my analysis is good, this should work. So when it loses, they take it personally. Now emotions enter the process. Now discipline disappears. Now they start interfering with trades, moving stop losses, closing early, overtrading, forcing setups, and slowly. Their trading becomes emotional survival instead of structured execution. This is why two people can use the exact same strategy and get completely different results. One treats the strategy like a business, the other treats it like a casino. Same charts, same market, different mindset. And here's something most people never realize. Gamblers are obsessed with winning. Traders are obsessed with protecting capital. That's the separation point. Gamblers think, how much can I make? Traders think, how much can I lose if I'm wrong? One mindset is built around excitement. The other is built around survival. And survival matters more than people think. Because in trading, you do not need to win big constantly. You just need to stay in the game long enough for your edge to play out. That's it. But gamblers can't tolerate slow progress. They want fast results, fast money, fast recovery, fast excitement. And that mindset quietly destroys consistency because the market punishes urgency. The more emotionally rushed you are, the worse your decisions become. And this is where most traders sabotage themselves without realizing it. They confuse activity with progress. They think more trades means more opportunity. So they sit in front of charts all day, looking for action, looking for movement, looking for something to happen. But professional traders don't think like that. Most of them spend more time waiting than trading because they understand something gamblers never do. A good opportunity is rare. And if you cannot wait, you will force bad trades out of boredom. That's why patience is one of the clearest signs that someone is actually trading instead of gambling. Gamblers need stimulation. Traders need discipline. Completely different energy. And once you understand that difference, you start seeing your own behavior more clearly. Because the real danger is not obvious gambling. The real danger is gambling disguised as strategy. That's what we're going to break down next, and this is where the line between gambling and trading becomes brutally clear, because gambling disguised as strategy is still gambling. It just sounds smarter. This is why so many traders stay stuck for years. They think the problem is technical, the wrong indicator, the wrong setup, the wrong market. But the real issue is deeper. Their behavior never changed. They still chase trades, still overreact to losses, still risk too much when emotional, still trade for stimulation instead of execution. The strategy changed. The mindset didn't, and mindset always wins. Here's one of the biggest signs someone is gambling instead of trading. They need every trade to matter. Every setup feels important. Every win feels euphoric. Every loss feels personal. That emotional intensity is the clue. Because professional traders think differently. They think in samples, series, probability, not individual outcomes. One trade means nothing to them. That sounds crazy to most people because beginners attach huge emotional weight to every trade. This trade could change everything. But that belief is exactly what creates emotional instability because now the pressure is too high. Now every move feels dramatic. Now fear starts controlling execution. Think about gamblers in casinos. Why do they keep playing after losing? Because emotionally, they believe the next outcome can fix everything. One big win, one lucky streak, one recovery. And emotional traders think the same way. That next trade will make it back. So they increase size, force setups, ignore risk, and suddenly one bad decision wipes out weeks of progress. Not because the market was unfair, because emotion took over structure. That's why real trading is boring most of the time. And people hate hearing that. Because boring doesn't sell. Excitement sells, fast profits sell, big wins sell. But consistency is repetitive, calm, controlled. And most people are psychologically addicted to stimulation without realizing it. That's why they constantly need action, need movement, need another trade. But the market punishes emotional urgency. The more desperate you are for results, the worse your decisions become. Now here's another major difference between gamblers and traders. Gamblers focus on outcomes. Traders focus on process. That distinction changes everything. A gambler asks, "Did I win?" A trader asks, "Did I execute correctly?" Huge shift, because you can follow your process perfectly and still lose the trade. That's normal. But emotional traders can't separate good execution from short-term outcomes. If they lose, they assume something is wrong. So they change strategies, change rules, change risk, and now there's no consistency left. This is why most traders never actually know whether their system works, because they never execute it consistently enough to find out. They keep interrupting the process emotionally. Imagine flipping a coin with a slight edge. If you stop after 3 flips because you lost twice, you never experience the advantage over time. That's how most traders behave. They judge everything emotionally and immediately. And immediate emotional judgment is what gambling behavior thrives on. Real traders zoom out, way out. They understand that one day means nothing. One trade means nothing. Even one bad week means nothing. As long as the process remains solid, that's emotional maturity. And without emotional maturity, trading becomes dangerous because now you're no longer managing risk. You're managing emotions through money. And that's exactly what gambling becomes. Now, here's something even more important. Gamblers are trying to escape reality. Traders are trying to understand it. That sounds subtle, but it matters. A gambler wants excitement, relief, hope, escape. An emotional trader often wants the same thing. They open charts looking for emotional satisfaction, not structured opportunity. That's why some people feel empty when they're not in trades. They don't miss opportunity. They miss stimulation. And that creates dependency. But professional traders don't need constant emotional engagement with the market. They can sit still, wait, do nothing. Because their identity is not tied to action. It's tied to execution. That's why discipline matters so much in trading. Not because discipline sounds motivational. Because discipline protects you from yourself. It protects you from emotional impulses, from boredom, from revenge trading, from overconfidence, from panic. And once you realize that, you stop seeing trading as prediction. You start seeing it as self-control. That's the real game. Not beating the market, managing yourself inside the market. And this is where most people completely misunderstand success in trading. They think profitable traders are smarter, better analysts, better predictors. Sometimes they are, but usually they're just more emotionally stable. They don't need constant action. They don't panic after losses. They don't become euphoric after wins. They stay neutral, consistent, controlled. Because they understand something gamblers never truly accept. Survival comes before profit. Always. That means protecting capital, protecting mindset, protecting discipline. Even when it feels slow, even when it feels boring, even when it feels like nothing is happening. Because trading is not about excitement, it's about longevity. And once you truly understand that, your entire relationship with the market changes. You stop trying to get rich quickly. You stop chasing emotional highs. You stop treating trades like lottery tickets. And you finally begin to think like a professional instead of a gambler. But there's one final difference that ties all of this together. And once you see it, you'll never look at trading the same way again. And this final difference is the one that changes everything. Gamblers are trying to win money. Traders are trying to build consistency. That sounds small, but it completely changes how you behave. Because when your only goal is money, you become emotional very quickly. You obsess over profits. You panic over losses. You constantly ask, how much did I make today? And that mindset traps you in short-term thinking. But profitable traders think differently. They focus on repeatability, process, execution. Because they understand something most people never fully accept. One good trade means nothing. One bad trade means nothing. Consistency is built over hundreds of decisions, not one moment. And this is where people completely misunderstand trading. They think profitable traders are constantly making huge money. In reality, most professional traders are incredibly boring with their approach. Small risk, controlled behavior, repetitive execution, over and over. That's why real trading feels slow, because real consistency grows slowly. But gambling always promises speed. That's the temptation. Fast money, fast success, fast recovery. And human psychology naturally wants that. That's why gambling behavior feels so attractive in trading, especially after losses. You lose money. And suddenly, patience disappears. Now you want it back quickly. So you force trades, increase size, ignore your rules. And in that moment, you stop behaving like a trader. You start behaving like someone emotionally desperate for relief. That's why revenge trading is one of the clearest forms of gambling psychology inside the market. The trade is no longer logical. It's emotional compensation. And emotional compensation is extremely dangerous when money is involved. Because the market does not care how you feel. It does not reward frustration. It does not reward urgency. It punishes emotional instability. every single time. Now, here's the uncomfortable truth most people avoid. A lot of traders don't actually want consistency. They want excitement disguised as success. That's why they constantly search for the perfect strategy, the magic indicator, the huge trade, the massive breakout. They are addicted to the idea of sudden transformation, just like gamblers chasing jackpots. But professional traders stop chasing emotional fantasies. They stop trying to hit big. Instead, they become obsessed with surviving long enough to compound steadily. And that mindset is what separates professionals from emotional traders. Professionals know something beginners hate hearing. Slow progress is normal. In fact, slow progress is healthy because consistency is built carefully, not emotionally. Think about the difference between a casino gambler and a business owner. The gambler wants one huge outcome. The business owner focuses on sustainable results over time. Real trading is much closer to running a business than gambling in a casino. You manage downside. You protect capital. You follow systems. You think long term. And most importantly, you detach emotionally from individual outcomes. That emotional detachment is one of the clearest signs that someone has evolved as a trader, because beginners experience every trade emotionally. Professionals experience trades statistically. That's a massive shift, and once you make that shift, everything changes. Losses stop feeling personal. Wins stop making you euphoric. You stop needing constant action. You stop chasing emotional highs from the market. And for the first time, you actually become stable. That's the word most traders are really searching for, not profits, stability. Because without emotional stability, profits never last. You make money, then give it back. Win big, then self-destruct. Repeat the cycle again. That's gambling behavior. And it keeps happening until discipline becomes stronger than emotion. Now step back and look at the real differences we covered. Gamblers chase excitement. Traders manage risk. Gamblers focus on outcomes. Traders focus on execution. Gamblers need action. Traders wait patiently. Gamblers think emotionally. Traders think probabilistically. Gamblers want fast money. Traders want long-term consistency. And if you're honest with yourself, you'll probably realize you've done both. Every trader has. The goal is not pretending you've never behaved emotionally. The goal is recognizing it early enough to change. Because the market will expose every emotional weakness you have. Impatience, fear, greed, ego, revenge, overconfidence, all of it. And if you don't learn to manage those things, no strategy will save you. That's the real lesson. Trading is not just a battle against the market, it's a battle against your own impulses. Your need for certainty, your need for excitement, your need to recover losses quickly. And the traders who survive long term are usually not the smartest people in the room. They're the most controlled, the most patient, the most emotionally stable. Because at the highest level, trading is not about predicting the future, it's about controlling your behavior under uncertainty. That's the real difference between gambling and trading. And once you truly understand that, you stop asking, how can I win more? And you start asking, how can I become more disciplined? That's the moment someone finally starts becoming a real trader.